All right, good morning, trade pros. Welcome to our morning market update for Thursday, July 12th of 2018. Today is hockey day in Canada. I got my hockey game today. It's a fun day of the week that I get to go out there and pretend like I skate faster than I really do. I recorded my hockey game once and I had to speed it up just to show it to friends, be comfortable enough with it. But in the markets, we have a lot to talk about. We're going to talk about oil. CPI came out, which is an inflation measure. The United States initial jobless claims this morning as well. I'm going to talk about NATO, and we're going to talk about why oil dropped 5% yesterday and why it's continuing to drop and will likely be weak for the remainder of the day. All right, so let's get started. Grab your passports. Let's take a little tour around the globe. We start with Asia. Japan's up 1.2%, Hong Kong up 0.6%, China up 2.2%. Big rally out of China. India up 0.8%. In Europe at midday, London's up 0.8%, Paris up 0.7%, and Frankfurt up 0.6%. So bullish across the board on Asian and on European equities. We're going to talk about why. And I think that some of the reason on this rally is there's a general consensus out there that before the United States lays this additional $200 billion of goods, lays tariffs on those $200 billion of goods, China and the United States will come together to negotiate. That's at least what the sentiment's been, and some of the inside reports have indicated. And so the equities are rebounding on that rumor. It's not confirmed yet. Markets move on rumor and sell on news. All right, so buy the rumor, sell the news is kind of the trade in these equity markets. The futures in the United States, Dow's up 0.7%, S&P's up 0.5 percentage point, while NASDAQ is also up 0.5%. So again, modest gains across the board in U.S. equities also, but nowhere near what Asia saw. So strong bullish momentum in Asia, declining momentum, but still bullish in European equities, and then U.S. equities slightly weaker than European. So we're sort of fading out on this bullish momentum. Crude oil up 0.8%, but still getting killed. When you say up 0.8, if you look at where it was yesterday, it's down 5% since then. All right, big sell-off in crude oil after the strongest drawdown of crude oil inventory since 2016. All right, mid-2016. So it was a little bit of a baffling trade. And what we did in our room is we saw it, and we can't lie to you, we initially said bullish. You see a draw of 12 million barrels, like that's bullish. But then it started to sell off. And then Steven, our oil desk member, said, you know what? I'm a bull, but I ain't no fool. I'm going to start selling rallies. And then he just sort of rode the way down and still picked up his target. So phenomenal job. To me, I was up, then I was down. I finished the day down yesterday. And I'm going to be honest with you guys, I'm a little bit distracted. My head's sort of elsewhere as I get inside of 10 days of my wedding. So, I don't blame it on that. I still traded like SH exclamation mark T, but I got the result for it, and I take full responsibility. Today, we just turn around and stop complaining, right? Gold is flat. Bitcoin's down 3.3% to 6174, and that's not good news. Anything below 6,000 on Bitcoin will lead to a pretty rapid sell-off to 4,400. That's the next key support level. So be cautious because these downsides are still coming up on volume, and rallies aren't really getting sustained for too long. CPI this morning. What is a CPI? Consumer Price Index. It's a basket of goods that are tracked and what consumers pay for them. And the percentage increase or change means that prices are going up or down, and that's a perfect measure for inflation. So it's an inflationary measure. Came out at 0.1% month to month. On the main number, the core number was actually flat at 0.2%. Over year, 2.9 as expected. So no real massive change to cause the market to rally. I think there was an expectation of an increase of inflation. So the fact it didn't increase rather in the United States, the fact it didn't increase in the United States says that, inflation hasn't really hit the mark either. So now we have inflation that's missing a little bit, labor market report that wasn't the greatest. Now, I guess the concern is, will the Fed continue to be hawkish? I think the answer is yes. But nonetheless, inflation came out. If you removed food and energy, it's 2.3% as expected. So literally this thing was across the board as expected. A non-event, you could say, in the market. At 8:30, we also got initial jobless claims. This was a really good report. This has put a little bit of life into the upside. 214,000 jobs were lost, or people filed for unemployment versus 225 expected. That's 11,000 less people that applied for unemployment than expected. So that's actually good for the employment number. The 4-week average went down to 223,000 jobs versus 224.5. Very positive as well. Prior week was revised higher from 231 to 232, I believe. But it was only by 1,000. So, I mean, considering you got 11,000 less applicants filing for unemployment, that 1,000 revision higher is nothing. It's literally nothing because it's now you have 10,000. Subtract it. Still very bullish. So bullish numbers. 10:30 this morning, we got natural gas inventory out of the EIA. That's at 10:30. NGE is the contractor. NG for natural gas. Expect some volatility around crude oil futures as well, but the most of it will be in natural gas markets. 12:15, Fed's Harker is speaking. 1 p.m., results of a $14 billion 30-year note auction. 2 p.m., Treasury budget, and 4:30, money supply in the Fed balance sheet. So that'll be interesting to see. I have no intention of trading until 4:30 today. None whatsoever. All right, so yesterday we got news from NATO that leaders at the NATO summit discussed increasing their spending on military and defense from 2% of their GDP to 4% of the GDP. That's a massive increase on defense spending. That was led by Trump, who said, you guys either do that or I'm just going to do my, he said, and I quote, I'll do my own thing. My friends say that, but it's usually around 2 a.m. when I want to do something and they want to do something else, and we split off. Like, all right, I'll do my own thing. See you tomorrow. But I don't know if I ever heard that in the meeting, but interesting. Trump also said he needs the NATO to share the burden of funding NATO, because I think the United States pays about 50% of the costs for NATO. So he's kind of made the point that he wants some more burden sharing across nations, and he's right. You know what? You got to be fair. There's about 12 ticker symbols that are affected on this, so I ain't going to read them out. However, the next thing we got to talk about is China. China has lowered the yuan, their currency, to its largest one-day drop against the US dollar in a year and a half. Here's why this is important. We said China ran out of tariffs or ran out of goods to put tariffs on because they don't import nearly as much as they export to the United States. And so therefore, what they're doing is other means or other measures. And we told you in our morning market update a couple of days ago, one thing they could do is devalue the yuan. All right. What does that mean? When you devalue a currency, it means internationally your goods are cheaper. Therefore, it offsets the tariff because, yes, there's a tariff you have to pay, but you're paying less for it. In the local currency, it washes off. And that's what they did. Last time China lowered the yuan this much, it was actually a little bit more last time before 2016, but it was in 2015, and the S&P 500 crumbled. It's like the carpet got pulled underneath, the floor broke down, and it just went for a free fall. This is very interesting to watch, and I think that the People's Bank of China, PBOC, kept these rates higher because that's what the U.S. wanted them to do. The U.S. said, if you devalue your currencies, we're going to label you a currency manipulator. And, you know, who cares? Label me what you want, I guess, would be my response. But PBOC cared about it because there is repercussions in the global economy and how other nations do trade with you. So what they said was, we're going to keep our currency at a balanced level. We're not going to float it. We're not going to devalue it. And that was their sign. They wanted to negotiate, and they were playing fair. Now they're just like, the heck with this. They threw in the towel, and they started to devalue their currency. That's why that's so important. It's not just the devaluation of a little bit like they usually do. It's the strongest one-day drop in their currency in 1.5 years, a few days after Donald Trump mentions these new tariffs. It's not a coincidence. Things are escalating, but the more they escalate, the quicker they're going to get together and talk it out. I feel like the Trump administration's platform is just go bold right off the get-go. Don't start small and negotiate up. Just make these massive, big promises, threats, or whatever it is, just to get to the table. I don't know. I'll put that out there to you guys. Is it working or not? Please comment. Let us know. I'd love to hear from you. And the next thing we're going to talk about, and last thing we'll talk about, is oil. Oil was down 5% and almost broke the 70 even marker. There's a huge, huge support level from the previous high on May 22nd. And that previous high should act as support. It was around 70.81. Of course, it broke a little bit below that, took out some sell stops, and it's back above. Vic, what do we, can you quote me oil? 70.75. So we're kind of at the moment, it's dropping, but we're kind of at the moment fighting that previous high that will now be a support. So anything below 70, 50, and if it breaks 70 for sure, you got one heck of a run of sell stops coming on crude. Stay to the downside today. It's too early to flip to the long. We're going to need to bottom out first. The problem with buying it here just because it's cheaper is you're trying to catch a falling knife, and catching a falling knife is never a good proposition. Even if you pick it up and if you manage to catch it, it wasn't worth the risk. So, yeah, don't do it. Here's why oil's down so much. Western oil field out of Libya is back online. The L field production is expected to hit 50,000 barrels per day in 2 days, and 72,000 barrels per day in a few days later after the 2 days, and expected to increase up to potentially 100,000. That extra capacity coming in, along with Saudi Arabia's increase based on Donald Trump's demands, along with Russia's now reported increase, along with the overall agreement of OPEC to increase together, it's just too much for oil. It's too much for it to handle. The price was high already, and there were no more buyers. And when there's no more buyers, the sell side comes out, right? Is it? Is it getting hit right now? I'm yapping. I should be turning around and making money. Now you guys have to send me $10 each into my PayPal account to make up for that. But look to the short side. 2 week today to look to buy. There was everyone that had wanted to buy oil had already bought it, which means what? Now you have a lot of sellers, no more buyers. It was inevitable that we had the downside. I was looking for the short. You could ask Victorio, 74, I think. No, 73.70 was my first swing trade short. Got stopped out. Didn't really get a chance to try it again, but I've day traded the crap out of it. So I'm still happy. All right. That's oil. That's the last thing we're going to leave off is this. Facebook, I don't know, man. Facebook is absolutely nuts. Get this. This is very funny to me and very ironic too. It's giving a newly formed group of academics, Facebook is, newly formed group of academics, full access to data on its 2.2 billion users. Didn't they just say that they're not going to give third parties any data? Now they're giving a group all and unlimited access to 2.2 billion users just months after Zuckerberg testified to Congress. And he said he'd never do that kind of stuff again before there was a panel and all this stuff, blah, blah. Yes, Congressman, get my people to get back to you. Clearly they didn't, because this is ridiculous. It's for the purpose of identifying areas of research about the effects of social media on elections and democracy. And they're giving third-party access to a company to mine that data for the purpose, of course, for the purpose of research into elections and democracy. I think that's totally off base, and he's getting away with one here if he does. All right, that's what I got for you guys. Take care. Have a great day. Manage your risk. Trade oil to the downside today. Equity is slightly bullish on the open, but if any of these resistances hold, start hitting rallies if they're thin volume. All right, you guys will do well today. You got a lot of opportunity. There's going to be volatility, and natural gas at 10:30 should definitely put some more volatility into energy markets. All the best. Manage your risk. Trade like a trade pro. See you guys tomorrow morning at 9 a.m. for the last morning market update of the week. Thanks, guys. Cut him, Marky. Bye. Lights, camera, action. Thanks, brother. Okay, makeup crew, you're free to go home. Yeah, take care. Can I get a touch up on my foundation? I'm nuts this morning. All right, YouTube, thank you for tuning in. Goodbye.